This. Thank you. All right, welcome everybody. Another Thursday night. These weeks are just going by so fast. I feel like we were just on this call together. Thank you for being here. If you are new, this is the second stage, I guess, to the free calls that I do. Monday nights, I usually do a call and I bring a speaker. And this past Monday, we had a hotel versus multifamily debate. That was really fun. I got my ass kicked. So now I'm probably gonna end up you're gonna see me owning a hotel at some point because of that. But it was great. This coming up Monday, we have Zasha. So if you guys don't know Zasha, her Instagram is Invest with Zasha. She's from Hawaii. Uh, and she's really great. She's on the come up as well. And I'm looking for a lot of people that are on the come up to kind of do strategic partnerships with, right? So whether it's in some sort of social media collaboration or in some deal collaborations, that's the direction that I've been going and have created a lot of success in. So my advice to you guys is, first advice is really align yourself with people that are on the come up too, that has enough time and energy that they will teach you, they will work with you. You can raise $500,000 and be on a general partner team. Those are great places to start. I was also talking to another team this past week, and she's here, Jennifer. So Jennifer Bonner and her Elevated Capital Group, they have an awesome team, and they're looking to align with another team like ours or somebody that's on the come up to collaborate with, and they have great ideas, great people on the team. So I have no doubt that you guys will get your first deal done soon. And that's how you start. You start by, maybe it's 4 or 5 of you that haven't done any deals yet, right? Just come together, learn together, do some underwriting together, build connections and network with other teams that are just right there ahead of you and that you can get yourself to be a part of. Getting into the first deal is the name of the game. Because as much as I show you on this call and as many courses that you participate or you purchase, reading it, looking at it, that's all you're gonna absorb and retain, I don't know, 5 to 10% of the information. You will never fully understand it until you get to apply what you've learned in a deal, to see it happening in the deal. A lot of people, probably everybody in our group in Legends that are participating in the Vegas deal that we have right now, is learning the whole steps, learning when the LOI went out, the PSA, the hard money that went down, when we got the insurance quote, when we got the debt, going through assuming a Freddie Mac loan. These are all things that when you're witnessing it on a real deal that you're participating in, you're going to learn a lot. And then there's the capital raising side. Okay, capital raising side, all the emotions that also come through with going through that process, right? I had aligned myself in the beginning with people that were just tiny bit ahead. They had one deal under their belt. And actually, did they? I don't know, but they had a deal under contract, and I got myself involved into the deal when the deal was under contract. I didn't have to do anything. I just had to raise some capital and just watch and learn the rest of the process. And it was, it gave me a lot of confidence as I was going through it. Now I do have a lot of real estate experience, so I can tell when a deal is good and when a deal is, risky, right? So the first thing is you look at the debt, you look at the loan. Some of the things, when I go into a deal, and I want to just start actually giving you guys a little bit of background of how I capital raised in my life. I forgot about this story until I was on a podcast today talking about my upcoming. So when I was 19 years old in college, I started, my roommate who had just graduated started working for a company called forex.com, Gain Capital. And he was like, "Hey, you need to put $2,000 into an account." and open up currency trading. I'm like, dude, I'm studying Rich Dad Poor Dad right now. I'm in a personal coaching program. Real estate's what I'm doing. Okay. He's like, no, you really need to do this. I'm like, fine, 2 grand, whatever. I put the 2 grand in the account. He calls me up at 2 in the morning. He's like, just be by the computer, have the software, have the program running at 2 in the morning. I'm like, all right, here I go. He texts me, hey, make this trade, buy USD GBP, something like that, whatever it was. The news comes out, the Frankfurt news comes out. Their market opens at 2 o'clock in the morning, Eastern time. And as soon as I placed the trade, the news comes out. It shot up to 8,500. I was like, 8,500. I was like, is this real? I sold it right there on the spot. It went up a little bit more, but I was like, we just went from 2,000 to 8,000 within 30 seconds. I was like, this does not feel real. I was like, let me take this money out first. I took 6 grand out and I was like, now let's do it one more time. And the same thing happened again. And then I left the money in there. Over the course of 3 months, we turned that 2 grand into 300,000. And that's with him coming back home late at night and start making his own trades and losing a bunch of money too. We probably could have made like 500-600K, but I'm extremely happy. And being who I am, I was like, let me make all of my friends millionaires. We're going to start a new account with $50,000, whatever I raise. So I went to all of my friends, everyone that I knew, and I was like, hey, give me $500, right? This is the results that I've created. I made a pitch deck, and this is my first pitch deck I ever made. And I made it in college. And so with $500 a person, I raised $75,000. $75,000 with $500 a person. And the first trade we made, immediately it went in the wrong direction. 12%, I think 12 or 15% of our account depleted. And I freaked out because it's other people's money. I've had this happen to me before. When he tells me sell, then I sell. But I freaked out because it was other. Adrian's here. He's seen it. He remembers this. Apollo Capital was what we called it. First of all, super illegal what the hell I was doing. I cannot just get $500 from everybody and start creating a fund and trading people's money. That is super illegal. I didn't know anything about it. So anyways, the account dropped by like 15%. I was like, oh shit, I sold it. And then it shot right back up. Multiple times this has happened and I didn't do anything till he told me, but I was just freaking out because it was people's money. And from that point, I just couldn't get ahead because we started off down. I started getting this like twitch in my eye. I was stressed out, like never been that stressed in my life. And we just kept losing a little more, a little more, a little more. And I was like, I'm never, ever going to touch people's money again. I'm never going to invest it. I'm never going to raise capital. So long story short, I bought a triplex with my money in Newark, New Jersey during 2008, right after 2008 or 2009, something like that. I bought this property for $220,000. Within 4 years, within 3 years, actually, it increased to $660K. I was like, man, I've made it. I'm living in the basement. The other units are paying for itself, paying for my car. I'm like, I'm out the rat race, right? But usually out of the rat race, when you play the cash flow game, you start buying, businesses and things like that. But I didn't have the money to do it. So I was like, let me do a reverse or a cash out, a refinance. So I took out about 400K out of the deal and I opened up 2 restaurants. Again, what the hell was I doing? I didn't know nothing about restaurants. I never started a business in my life. And within the first couple months, we were making so much money. The restaurants did $1 million a year, but I made so much money on the first couple months that I didn't know what to do with it. I didn't know at the end of each quarter, we had to file sales tax and all these other taxes we had to pay. So I was like, all right, I have like 30 grand in my pocket in cash, went to Atlantic City, got drunk, blew all the money. Multiple times I did that. I was like, oh, whatever. Next week, we got a whole bunch of money coming back in. Time for taxes. I was like, we got no money for that. I got no money for this. Then I started falling behind with the vendors, and then with the rent and everything. And I was barely holding on. I did that for like 3 years, working 17 hours a day. There were days that I would go to Restaurant Depot in the morning, pick things up. At first, I paid an employee to do it, but then I was like, we need to cut costs. So I went and did it myself, worked until 2 in the morning sometimes, just to try to make ends meet. I couldn't even pay the electric bill at my house at the end of the month sometimes. It was crazy. And because it was a triplex, I had tenants. Multiple times water got shut off, electricity got shut off. I'm like, oh, I don't know what happened. I think it was just, all the stuff you had to make up. And eventually I ended up calling it quits. I lost the restaurant. I sold it for like 50K, put in like 475,000. Sold it for like 50K. Lost my house. My car got repoed. I had a new Ram 1500 that got repoed. And I was like, wow, I had about 10 grand in my bank account. And I was like, I'm not paying anybody. I need this money. I got an RV, not an RV, a U-Haul, and I moved to Florida. I was like, I took all my stuff, moved to Florida. And it wasn't until actually the end of last year that I continued paying off all the debt I had. I just cleared my restaurant debt at the end of last year. Now, had I even known that I could have just done some sort of bankruptcy, I would have been fine. But I was like, nope, some pride in me, not knowing. I just didn't do bankruptcy. I just kept paying these interest and late fees and all this stuff and paid everything back. I paid the vendors back. I paid the personal loan that I had back, and everything's finally done. I'm done with it. Okay, so moved down to Florida. I went to a real estate conference, my first one, and it was Chris Crone. He taught me how to do partnerships in single families. I was like, I know this. I know real estate really well. I studied it. I watched all sorts of stuff on YouTube. I went through Rich Dad Poor Dad's personal coaching program, and I know it. So I started to put meetups together in Florida. And maybe nobody here has seen it, but there's a video of me doing like a meetup in like a random room. It was like, actually, it was good. It was like 30 people showed up. One person invested with me in the deal.
I was there.
Oh, you were? Yes. Okay. So $46,000 was the investment. Not only did I need somebody to put the money down, they needed to sign on to the loan as well. I couldn't sign on to anything. My credit score was below 450. I was 400K in debt. It was brutal. Really, really hard times in my life. And I think it contributes to the mental fortitude that I have today, the trust, the faith that I have today, all of that. I fell flat on my face and then got ran over by like 5 trucks. So anyways, from that property, we did so well on Airbnb. He invested in another one. He told his friends told his friends, and very quickly we got to about 12 Airbnbs, like total units. We got some triplexes and stuff like that. I'm doing $20,000 a month now. And I'm like, nice. So this was probably 3 years ago. And then I moved to Peru, 4 years ago. And then I moved to Peru. I'm like, that's it. We're good. We're set. In Peru, I was living like a king. Where I was living was $900 a month. It was the Beverly Hills of Pisac in Peru. I was like, I'm living here for the rest of my life. I wake up, I play the guitar, I learn the guitar, I go to, we just sing songs and do stuff, sit around the fire. I love it. I'm doing it forever.
I was there too.
Yeah. Thanks. So look, she's verifying my story because all of this, I'm not exaggerating any of it. Now, at a year, November, wait, wow, this is more than a year ago, 2021, November, September, I came back to the States and I was going to pack all of my stuff and move to Peru. I went to a Publix in Lake Worth, Florida. And there was an 85-year-old lady working the cash register, sitting on the chair, wrist guards on, can't help me bag anything. I bagged everything. And in the Asian cultures, we do not, like, the elders are taken care of. All right. Like, parents will move in with their kids. They will not be working at a grocery store or Walmart or anything like that. So I was really heartbroken there. And I was like, I've created such a good life for myself through real estate so fast. And there's something that was just eating at me that I needed to do something about. Like, if I can change the life of one person to not have to have this outcome right here, I've done my job. So I started to do these types of calls. I actually still moved to Peru. I was doing my first calls of these in Peru, teaching how to become financially free through real estate. First, it was like 6 people in there, 7 people. Um, and then it was like that for maybe like 4 or 5 months. Think about that. Imagine doing a Zoom call and you're trying to touch people's lives and you have 7 people show up. 3,000 friends on Facebook, 7 people, sometimes 3. I was like, wow, this is brutal. Then I met Nick. So Nick over here, his dad is the cousin of the first person that invested with me. And he interviewed me and I was like, who does your social media and stuff? And he's like, my son. I'm like, oh, can I talk to him? So I gave him an opportunity. I was like, I can pay you every month. So he's here. He's over there, Nick C. I can pay you every month, or I will fly you to everything I do, all the conferences, everything. And I have moved back to the States at this point. I was like, stuff with politics and COVID and all that nonsense. I moved back to the States and Nick started helping me with social media. I hit 1,000 followers in, when was it? July?
At the first grant conference, July 14th.
July 14th, 1,000 followers on Instagram. I had like 400 before that. And so we just started making videos. He was editing my videos and I was like, great, this is awesome. And then I said, all right, it's time for you to outsource this. So we started a marketing company. And from July 14th, 2011 to now is 2023.
2022, not 2011.
Oh, it was last year?
Yeah. Also, 2011 was 12 years ago.
Oh, okay. Wait, okay. Yeah. All
No,
right.
Last year. It was
Okay.
last. I haven't even known you
Year.
for a year yet. Come on.
Bro. So July 15th, last year, I had 1,000 followers on Instagram. I've leveraged him. I leveraged work. I've consistently been on calls. I did these Zooms. These Zooms started getting to 24 people, 45 people, 100 people. It got to like 170 at one point. Then now everybody's doing Zooms. At that time, nobody was doing Zooms. Nobody did Zooms. Nobody did WhatsApps. I did all that. Like, we went to the grant conference in July or whatever, and we collected like 300 phone numbers in WhatsApp. And then it started blowing up. These calls were huge. Now everybody's doing them, which is cool still. I think that's inspiring for me that everybody is, I've kind of paved the way for a lot of people in this. And now my Instagram's at, I don't know, we hit 100,000 followers, 103K.
Yep.
So that happened from July last year to today. Now, I'm saying all of this not because I'm trying to brag or anything. I just want to show you guys what's possible when you take massive actions and you have to be consistent. My one of my coaches told me, he's like, look, you swing for the fences every time. You're a big visionary. You go for the home runs. Now, anybody like have that same thing? Just big vision, go for home runs all the time? Yeah. And he's like, you need to be deliberate about and intentional about all the little things you do. It's the bunts, it's the singles, it's the getting on bases over and over and over again that's going to amount to your home run. I'm like, oh, okay. So 11 Zoom calls a day, every single day for a year. The entire year last year, doing these calls consistently over and over again. I was able to create that. Okay, so just giving some, if anybody's starting, that's what it looks like to start. It ain't pretty. It's not fun. It was pretty fun because me and Nick had a lot of fun, but it's tough. It's tough to do it every single day. That was all the little stuff that I wasn't, really even accounting for myself, because it was in service to others, and just, I was like, it's not even a question for me to do it. I was also able to close as a general partner. My first deal that I closed was May 10th last year, 42 units, industrial storage. Savannah, Georgia. May 10th. It hasn't even been a year. Then we closed another. Then we closed another. Then we did 174 units. Then we did 300 units. And then now we got another deal on the way. The first 4 deals, the first 5 deals, I didn't lead at all. I just wanted to play a little part of it. And so I wanted to, where I'm getting at, there's a point. Okay. Get to the point, Alex. The point is a lot of people spend time underwriting deals just nonstop, right? Just underwriting deals, talking to brokers, not able to close any deals. That isn't the main focus here. Good. You can take that for learning, but that's not going to get you the deal. I'm telling you, 99% chance you're not going to get the deal because you can underwrite deals or you can call brokers. You need to underwrite teams. Everybody here, focus on underwriting teams. Underwrite people's deals, okay? Other people's deals. Underwrite the syndication team, the lead team, okay? Figure out who they are. Okay, the underwriting is not just numbers. It's actually going onto their calls, like you guys being on my calls. Who is this person that's running this deal, right? And then let me just figure out how can I tag along so that I can get 1 deal under my belt. Tag along so I can get 3, 4 deals under my belt so that I can now go and lead and do a deal myself. And that's where everybody should be focused. Okay, like I love that everybody's trying to underwrite deals, sending deals all the time. You know, I was on a Rockcliffe Warrior call today. I think Allie was there. But one of the things that I heard that really stuck with me was he's like, you know, all the good operators, if you got deals under your belt, you will have newbies coming and saying, hey, I got this deal. Can you underwrite this deal? Can we do this deal together? Well, the way that you actually do a deal with a team like that is you say, here's a deal. I'm bringing $1 million to the table. I'm going to bring them. Now somebody's going to look at your deal. Somebody's going to say, yeah, let's go. Let's do it. But most of the times the expectation is I got a deal. You close it for me. You operate it for me. You raise the capital for me. You sign on to the loan for me. What? That is not something that a team that is already doing deals wants to take on. Doesn't matter where it is. Doesn't matter how good the deal is because they got their own stuff going on. We got our own stuff going on. And what I'm saying to you guys right now is exactly what you should take. And when you come to me or come to anybody on our team or go to any team with is, hey, I got a great deal, but I've also talked to a lot of investors. And the way you do that is you can start by making, and this, we just made this up the other day, model deals that you do. I vetted these teams. Okay. Here's a deal. Would you be interested in deals like this? Just start talking and reaching out to your resources in your network. Would you be interested in a deal like this? I think I'm interested in it. What about this one? What about this one? What about this one? Now you can get also a gauge of how much money you could possibly raise. Now you can go to the operators and say, here's a deal, and it meets the checkbox of my investors, which I could bring 500K to the table. All right. Now, I promise you, you will have a much better chance of getting into that deal and closing that. So that's the way to do it. I would say start vetting teams, start underwriting other teams' deals. When people pitch you deals, be like, oh, cool. Let me look. Can I underwrite this deal? Can you show me the finances? And, you know, so that I can see how you got to these numbers. Right. We have a deal that we're like, it's a 2.1x return in 5 years. Now, a 2x return would be $2.8 million of evaluation. Day one, we can put the utilities and everything back. That's about $1 million in evaluation. Rents are 250 below market. That's about $1.8 million evaluation. That's 3 million right there. That's a 2x, could be done in 1 year. But wow, okay, so I can see that this is a very conservative underwriting. You're saying in 5 years, you're going to raise the rents to market rents, which is right now, and charge back the rent, utilities. All right, I can see that that's a good deal. See, you start to underwrite deals and you underwrite teams, you're doing due diligence on teams. because you may find a team that says, hey, 2x on this deal, and we're going to do a 6% cash on cash return. And you look at it and you underwrite the deal, and it's like, wait, but we don't even have positive cash return till year 2. You can't tell your investors 6% cash on cash returns and then say in 2 years we're going to start cash flowing. That's going to kill your reputation. Now you're like, okay, well, I don't really like how this team underwrites and how they present the deals. Next, right? So underwrite teams, underwrite deals, so you know who you want to work with, because that's going to get you to where you want to go faster. So that's my opening spiel. Thank you for listening. Let's open it up for just quick Q&A of where are you struggling? What are you looking for? Where are you in this game? Are you just completely new? You don't know what's going on, or you're already a savvy investor. What's the wall that you're hitting up against? And let's see if I can help.
Alex, good evening,
Yo.
everyone. Nelson here. Good evening, Alex. Thank you for your service, brother. When you were speaking, and obviously I haven't done a real estate deal, so I'm new to this, learning from you. Thank you very much. When you say, I'm curious because you say your ideal outcome is to build your own team, do your own deals. How does that include you? How do you benefit from that? Because I believe in a compassionate capitalism, win-win. I mean, yes, when the tide rises, all vessels are risen. But why would you? How does that happen? Why would I want to write that under our team, your team, part of your team, and we all win? Why would that be?
Yeah, because these deals are bigger. Apartment deals. When I first started in real estate, I was buying single families, like most people. We all easy deals, right? These are deals that you can just figure out how to do on your own. I looked at apartment buildings. I was always like, that's not for me. How much money am I going to have to come up with to be able to do that? And it was just never even in the possibility. And then I learned that this is a team game. When a team comes together, it's broken down into multiple sections in a group.
Okay.
You find the deal, there's a percentage you can get in the deal, equity and acquisition costs. Putting money up is always going to be your fastest way. Money, the point of having money is to accelerate and compress time. That's the point of money. Okay. And then so you could put money up and probably be in the deal pretty fast. Now you better underwrite the crap out of the team and the deal, because that is, I wouldn't say gambling, but almost like gambling, because you could lose that money. Right. So we don't really take last of anybody's money to do risk capital with. People are like, hey, I got like 25K. I'm like, is that all you got? Yeah. No, can't do risk capital with us. I don't want that type of pressure either. Right. I don't want you nagging me every day over 25K. And then you can also be on the asset management side. Asset management is broken down into a whole bunch of stuff. It's who's going to be managing the property manager, who's going to be walking the investors through the portal to invest in your deal, who's going to be sending out newsletters, who's going to be on top of bookkeeping, who's going to be boots on the ground. That little box right there has a bunch of positions that could be filled. Right. So now you can find your way onto a team if you can fill any of those. Then there's the capital raise. Every 50K or 100K you raise, there's a portion of the deal that you get that adds to your net worth. All right. When we talk about multifamily, everybody should only be considering in their mind that this is a long game. When you get into a deal, is it adding to my net worth? How much is it adding to my net worth? Oh, $50,000. Great. And then I get a $3,000 check. Okay. Right. You're playing a game of just adding these things up, but in your mind, you have to be calculating it, because you want to get to 5 million, $10 million in net worth so you can sign on to loans. So that brings up the fifth part, signing on to loans. I know people that sign on to loans and they get 40% of the general partner deal. I don't know, on a $40 million, $60 million deal, how many people can sign on to that loan? Not very many. So if you have $60, $70 million in net worth, you now can command You are the one in the position of power to negotiate, right? So we're always just looking to build up our net worth. And you know what? Maybe next week I'll have Nick send out a sheet that we use for calculating your net worth. You want to calculate your net worth, and then you also want to calculate your real estate holding. Your SREO is what they call it. The banks will look for that. So looking at these two things is the only way you're playing the game. See, your relationship to money will change if you are playing a game of just stacking your net worth and stacking your liquidity. You still got to make money. There's still a part that you got to address, which is money now. How do I make money now? But when you get into the multifamily game, look at it as a long-term building something up. And you want to look at your net worth and liquidity all the time. What's the minimum net worth required for a KP? It depends on the size of the deal. The bank's going to require you to not only have a certain net worth, but you also need to have certain liquidity. Now, multiple people can come together to make that, to sign on to that deal, right? To add it together and make that. Now,
Alex, can I interject?
wait 1 sec. Agency debt will also require 2 years of you being in a multifamily deal. So now you got to find somebody with experience. Okay, go ahead, Jen.
So Adrian's question, the KP question, just kind of compounded with Nelson's question, but I don't feel like it was really answered. So the way that Alex gets paid, like people that don't put the money up, that put the sweat equity in. Well, no, you put the money up, but you might put in different effort. And what you were saying, I'm just reinforcing in more layman's terms, like you might do bookkeeping, or you find the deal, you manage the deal, you work the deal, but you're still putting in your time and effort, which equates to money.
Which equates to equity, right? And this is also the other part. Yeah.
But his question was like, why would you like sort of, and correct me if I'm wrong, Nelson, but like, what is the benefit for you is what I think he was asking.
Well, no, thank you. So my question, when I thought Alex was saying, now people are doing their own deals, their own teams, not including him or legends, right? They're like creating their own. I got you.
People could do whatever deals they want. I mean, it's all a team game. See, here's the thing. Why would you put $100,000 into a deal that is $5 million and you get a piece of it, or $100,000 buy your own property? First thing, buying your own property, you're going to have to put the work in. There is no management company that's going to fight for your deal like you're fighting for it, because you're going to pay them, I don't know, $3,000 a year on your property. I don't know how much it is. It's not a lot, right? 10% of the income on the deal. It's not a lot.
And not only that, Nelson, like it's just true to Alex's nature and culture is like, if people take the knowledge that he expands and teaches and they go out and make themselves successful without him, like he doesn't need to make a that is I would guess a spiritual, soul-fulfilling like community thing that we know is about. So nobody's greedy. It's just like being a teacher. Like if they take the knowledge and they go and utilize it, like great. No, I can give you so many stories of working with Alex in real estate that has been so rewarding, and also a teaching and teacher moment that maybe it wasn't appropriate for me to jump in. I just felt like the need. I didn't feel like you answered your question, and I wanted to. So.
Well, no, I appreciate you.
And thank you. Yes, thank you both.
So Jen's always got my back. She's seen my journey from the downs and the ups and all that stuff. So thank you, Jen. Thank you for for those of, she does know me and she does know that is my nature. But for those of you guys that are new, this is. Yeah, I want everybody in here to get to my level as fast as possible. I want to give you all the tools to get to my level as fast as possible. I don't care if you do a deal with me or not, but I know that somewhere down the line, there may be an opportunity where we will work together and you're like, hey, Alex, and this happens all the time. Remember that thing you said? And I'll usually say no, but that really made an impact. And I just did all these deals. And then I have a deal right now that I would love to work with you on. Awesome. I don't know what the extent and the ripple effects of this call would be. I just want, I want everybody to get to that level. So I have more friends. I have more allies, in this game. You could be doing all the other deals. I'll still be doing deals. Right. So, okay.
He's just farming karma.
Farming karma. That's a good way to put it, I guess. Okay. We're gonna look at a deal today that Allie brought up. It's a pretty interesting deal. It's hard to underwrite if you get too close to the deal. All right. So she's like, I know how to underwrite, but this is a portfolio. Same thing. First of all, look at it just from, and this is a deal that doesn't have any numbers on it. I mean, it doesn't have any price, which is cool. So we can come up with a price. Now I'm going to work with Allie to go through this. And at any point, because I'm going to be sharing my iPad screen and I'm going to be writing on it. And then we'll open up, if there's time, we will open up the underwriting sheet. We probably don't really need to go that deep into the sheet unless this deal is really that great. Then Allie and I will get on a separate call and we will talk about it. But first of all, it's in New York, so I'm already kind of like, but for the sake of education and for the sake of just wanting Allie to really have success in this business, let's go through it. Other questions? I forgot I just answered one question. Wow. Anybody else?
Alex, I think Piyush had a question
Who?
in the chat. He
Oh.
asked what piece of the pie the KP gets and what's the risk?
So the risk for the KP is really like nothing. Okay. They're using their net worth to get equity. So this is what everybody needs to learn, that money will accelerate your time, but at some point you want to get to a point where you've broken free from the money game. You use your knowledge, you use your words, you use your net worth to generate income. So the person that is signing onto our debt, he made $30 million this year signing on loans. 30 million. Didn't put a single dollar into a deal. Does that sound fun? I mean, that's breaking the money game, right? You just say, I have this number in my PFS, my financial statement, my net worth. Here's my real estate holdings. You need somebody to sign on to your loan? Here you go. I sign on. I want 15%. I want 20%. I want 40%. How desperate are you? He's in the position of power when you're asking him. And there's no shortages.
Yeah, but isn't he on the hook then? So if it fails.
No, it's not. So it's a non-recourse loan. So there's two types of loans for everyone that's really new. There's something called a recourse loan and a non-recourse loan. Non-recourse loan is guaranteed by the deal. Recourse loan is a personal guarantee. Now, why would a bank give you a non-recourse loan? Because the deal itself meets their underwriting when they assess the risk of if the deal fails and I take it back, do I lose money? Banks, when they give you a non-recourse loan, they're basically saying this deal is good enough that the deal itself will be sufficient. Now, a lot of times people sign on to loans that are recourse is because it's like a construction loan or whatever. It does not meet the bank's numbers. It's risky for the bank. The bank wants to know that they can come after somebody. Oh, you think you can do this with this deal? You think you can create and bring the DSCR or the debt service ratio up to this number and it's not there right now? You think you can manage better than the previous manager? Okay, put your neck on the line, right? You got the net worth for this loan, sign on to it, personal guarantee.
So is that like, you got to be like a big network net worth person? Like, even if you're talking about a smaller deal, that wouldn't apply.
We have a deal, $5 million, $2.4 million loan. You have a $3 million net worth, you can sign on to it. Well, you need the experience and the liquidity, but you can. Right. So it's about getting your net worth up, because if you get to 3 million, 4 million, 5 million, you can sign on to other loans. You can even sign on to a $10 million loan with a couple other people. Just get that experience going. Right.
So I'm thinking about asking you the question I wanted to ask Grant Cardone.
Okay, sure. And then we're going to go to Fody. Go
Do you
ahead.
want me to do it, or do you want to move on?
No, ask.
All right, so I'm thinking about selling Lake Worth, and you know, 2 doors down from where you used to live. Clearly, you know the property. It based on the comps, it's worth about 800,000. Based on the cash flow, it's worth about 1.2.
Yeah, but you have a residential property, which means they will base it on comps. They're not going to base it on cash flow. So
Well, an
that's the
investor
first thing. No, they
Well,
won't.
and look,
They will not. Because you're also giving them numbers based off Airbnb numbers. Okay,
well,
so
the bank I would be dealing with like a 1031 cash buyer. And
Yeah.
I'm not comparing this to multifamily. I'm not trying to sidetrack, but I'm just using real life numbers to kind of maybe scale it down.
yeah, I promise you what's going to happen is you're going to go to the bank and they're going to send an appraiser out there, and they are not going to look at how much money you make. They will look at maybe they will consider market rents. Okay. And the only reason why they would consider that is to add to the debt to income ratio for the buyer to see how they qualify. Now, once they go and start paying 1.2 million for this, unless they just are desperate and they're going to go and fork up, 400-500 extra on top of the loan, it just doesn't make sense. You're not going to be able to sell it for 1.2. Now, if it's worth 800, cool. Then what's the question? You're going to sell it for 800.
And buy 3 properties in Fort Pierce that I could do 3 times the size. Now, I have to also say, this is to the audience, like, a big reason that I'm not cash flow positive is, as a friend, Alex took my money and invested it into a multifamily deal that is doing really good. And that was a loving act, not only that he knew I had the money, but a lot of my friends and family wanted me to slow down. They wanted me to like take care of my mental health and things like that. And it was like, get the money. You don't stop. You have no chill factor. And because I was like, Alex, I can turn that 100 grand way more. Da, 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 da. So that's sort of a testament to you that you were raising the capital, but you were really looking out for my mindset. And now that money's not there, I get mad at you sometimes, but it does cause me to chill.
Mm-hmm.
So that's just a little kudos to you. And
Is it
secondly, I just looked.
Uh-huh. I appreciate it.
It is. It totally is. I mean, I don't like it at times, but like, I am glad, because if the property wasn't, it's doing great. It was a wise investment, and everything you do is very calculated and smart. So there's nothing I would question going forward. And we've had deals that were, much more difficult. So, but then, contrary to what you did by taking that money out of my hands, is now if I sell the property, I'm going to go and buy 3 in Fort Pierce, where I'm, obsessed with.
Yeah.
And see the upside value of investing early.
Gotcha. Yeah. So I know your question. So here's the thing. You're in Fort Pierce is great, but you're going to go buy 3 single family or duplexes or whatever it is. And I know you, with one house, you were busting your ass. You drove to Home Depot. I don't even know how many times for that one house. And you were freaking out, stressed out. Now you can go get 3. Yes, you could probably double your money in 2 years, but you've also made that your full-time job. How many can you do? Right. So we have a money now and also an investment. Money now is your hustle. your investment is going to over time build into a machine that operates on its own. Right. So my teaching for everybody and for myself is I shoved money into real estate where I don't have to do anything because I want my time back. Now, right now, you're in a place where you're like, I'm bored. I want to do more stuff. Cool. So if you want to turn that 800K or whatever equity you're going to get from there quicker, then you also put in the work. Yeah. If you put in the work and the money, you should get more returns than a passive deal where you don't even think about it until tax season time. Right. So
Alternatively, I do a multifamily and focus more on real estate sales and buying and selling.
exactly. Your hustle can always come from somewhere else while your money works for you. If you put your money and hustle into the same place, I hope you get a 2x in a year. I would want a 3x in a year if I got to put all my energy into it like that, especially if I'm driving to Home Depot all the time, right? Like now my time is just becoming so valuable that I can't picture myself driving to Home Depot to pick up anything. Like I would just never do that at this point, right? So the path is passive income. Like we all know passive income, and this is the challenge everyone needs to get over is passive income makes your returns, cash returns much lower, but you got to build a passive income because as your time becomes more valuable, that passive income becomes more valuable. Right now, you're not valuing your time. So you're like, I'm going to go and do all these things to make the money. Great. Do a combination of both. But anytime you have extra money, you got to have allocate some of it into passive income, into assets. You got to invest into deals that you're not operating. It was hard for me to understand that. I had Airbnbs doing $20,000 a month. I'm like, why in the world would I give Grant Cardone money and have this thing give me 3% cash on cash a year? But it's in a couple years when we refi that deal, Jen, and you get $100,000 check and you still have this deal cash flowing for you, you're going to be like, yeah, let's do it again. And then let's do it again. And then at some point, what ends up
That
happening
was
is
exactly the next point I was going to say. That was the clincher. Not only were you and your wife like, we love you, we want you to slow down, you have this money, you're not going to slow down unless it gets out of your hands, give it to me, trust. And then and I was like, I could do more. And you're like, but you don't have to do anything. And the difference is I was like, but my stocks are doing good. But yeah, when you sell your stocks, then you no longer own the stock. When we give you your money back in 3 years, you still own that property forever.
well, until we sell it. Yeah.
Until we sell it or you sell it or whatever. Like there's options, but it was like a little light bulb.
Mm-hmm.
And I'm like, wow, really? That makes so much more sense.
Yeah. So as we're having this conversation, everybody, I hope that something is also clicking for you. And if it's not for you, there are people in your life that when you start raising capital will have this same mentality. How do you overcome it? How do you enroll somebody into it? Right? These are all conversations that's very helpful. So take something away from here for yourself as this conversation's happening. All right. So go ahead, Fody.
I was going to talk about something else, but now that Jennifer brought that up, I wanted to say to Jennifer, unless you're planning on doing flips full time, I would invest in multifamily because you're going to take on another full time job. I've done this. Roberto's done this. I've done this 35, almost 40 years now. And it's a full-time job, even for me doing my own stuff. You can leverage your money in a multifamily deal better than you're going to leverage it in a little single family. And,
Absolutely. You're co-signing exactly what Alex has said. Ali just said it in the chat. Like what he's not lying. Like I was renting U-Hauls, fighting with the load, and this was like in the beginning of Corona when like supplies are getting in demand. And I'm like, I actually enjoy, Alex knows, like I actually enjoy the work itself, but then it became a headache And that it became like, wow. So flips, no, I don't want to do flips anymore. I want to do flips. I guess what I'm saying more is like, it's hard for me to sit still, right? So if I give you money for passive income, I still need to stay busy. But I'm a
Well,
licensed
you need
realtor,
to-
so I kind of answered my own question when I was talking to Alex, like just buy and sell real estate.
There you go.
You need to, I don't know what you do for a full-time regular job, but if you want to stay active in the multifamily thing, then you definitely need to become a general partner, because that will definitely be work for you.
She's on the way.
But
Yeah, that's true. I
you can
kind of owe you, Alex.
you can still have your W-2 job. And also remember, when you're doing flips, if you're not keeping them for at least a year, the taxes are going to kill you. Passive
Oh.
income, you're going to pay from nothing to 15, maybe 20% in passive income, where you're going to pay a lot more than that in taxes just from
Oh, yeah.
flipping.
And
And you
everybody
don't want to
thinks that.
1031 everything over and over and over and over again.
I was
because
just gonna say
someday-
that.
That's going to come back to roost. If Biden's trying to get rid of the 1031,
Yeah,
which I think
and it's
would
not
be,
as easy as people think. I just did a
no,
course.
it's a
in
lot of
1031.
work. It's expensive, and it's a huge amount of pressure, because you have to identify the other property you're going to put in 45 days. You
Not
know,
only that,
so-
but there's a lot of things that people don't know. Like the person buying your property has to hold on to it for 2 years. Like there's a lot of things on the buyer side. So I like, as a licensed realtor, I have to do continuing education. I do really appreciate your input, and I want to let Alex get into this deal. But I guess I'm using myself as a thought experiment for not only good advice from somebody I trust, but like for you, for knowledge. Like I don't, materials aren't fun. It was fun getting materials in 2018.
Yeah.
You know, it kept me
Right.
busy, but this is not that
But-
day. That's not the era.
let me add one more thing. For those who have never done a flip, DIY TV is total bullshit. Okay, you do not turn a house and flip it in 2 weeks and do a full-blown remodel and addition, all that crap. They don't show you anything of what really goes on. I mean, just the permitting process, depending where you're at, can take over a year just for the damn permits.
Hey,
So I made a fortune off of DIY, because back in the day when I was a contractor in California, DIY TV was a brand new thing, and my prices were quote unquote too high. So they would do it themselves, then call me to tear it out and do it over and pay twice as much. So plus what they paid to do it. So
hey,
don't
ask Alex
let that fool
about his flip in Lake Worth, where it took me about a year for him to allow me to be the bully. Actually, it took his wife and go in there and finally set things straight. So I think we're gotta give it back to him. But thank you for the advice. Much appreciated.
Back to you, Alex.
Yeah. Thank you guys. That was awesome. All right. So what we're going to do here. Okay. This is not blank. Okay. I will try to make this bigger for everyone to see. All right. Let's take a look at this deal. I'm not even going to use my iPad now, because that's just going to not show this thing. So, Allie, do you want to come off mute and just kind of give us a little bit of what you know about this deal as I look through this?
Yeah. So hi everyone. So I am new to multifamily. I come from a flipping background, which is why I was nodding my head so much as he was talking about flipping being a full-time job. It definitely is. But so I grew up in this area. I don't live in this area anymore. I live in New York City, unfortunately. And when I really kind of just stumbled upon this deal because I was trying to practice all the things that I've learned since January. So I found this deal and I was a little intimidated because it's a portfolio deal. But in Rod's warrior program that I'm also in, I connected with some people who are also doing a lot of self-storage. And I've also heard Alex talk about self-storage on his calls. And I started reading all about self-storage for the last couple months. And so when I found this deal, it was in an area that I'm very familiar with, in an area of upstate New York that they're dumping a ton of money into. Developments, a lot of art, a lot of murals, and all the things that Alex talks
Oh
about.
man. Oh man.
And they're putting up a lot of new residential, like big residential buildings, and redoing museums. And so there's a lot of work going into that area, millions, billions, at this point. So I found this deal, and like I said, I was very intimidated by it. So it's a total of like 1,400 units, I think 1,418 units total. And they're all within a 5-mile radius of each other, pretty sure. I have not been to this property. This is just what I'm getting from all the information that I've collected. 2 of the locations have approved expansion plans already. So that was one thing that caught my eye. Again, I'm very new to this, so this deal is very intimidating to me. And I tried to underwrite it the best I could, but I'm still learning how to underwrite. I had someone help me. Another person in the warrior program helped me underwrite, and I still was a little bit lost. So I asked Alex if he would help me walk through this, but the whisper price is 20 million. I do know that.
Okay,
And
so
I do know there's no offers on it currently.
how long has it been on the market?
1 month.
1 month. Okay. So first of all, everybody that is selling right now probably distressed on some level. Okay. And why would they sell if they can do the expansion themselves? What have you gained first? So just, I want to make sure that we give you the most value here. What have you gotten to understand up to this point with the person that has helped you before?
The underwriting person?
Yeah.
Not much, because he only sent me over the underwriting and didn't like walk through it with me.
Okay. So do you have the underwriting?
Yes. And
Okay.
I know there was some things missing on that. Also, there is a $12 million assumable loan at 4.18%.
Okay.
Let me get that underwriting. See if I can pull it up. Because I'm pretty sure there was like even expenses were not like in the underwriting.
Okay, so I'm gonna give you share screen and you can share. I'm gonna stop sharing for a second here. So let
Okay.
me take a look at what you've got so far,
Okay.
because I don't know, maybe their underwriting's better than mine, so we'll see.
Okay, so I can share now, right?
Yeah.
Okay.
All right, guys, get ready to learn. Get your learning hat on.
Can you guys see my screen?
Mm-hmm.
Okay. So I'm gonna make this bigger. So this is the Michael,
Michael blank sheet.
yep. So, and I'm still learning this sheet, this whole thing. So I'm very much a people person and not a numbers person. So this is not my expertise. So this already, the expenses is low because I don't think he actually even, I don't
It's
even.
okay. It's storage. Storage expenses are gonna be low, so it's fine.
Okay. So this is what we got.
All right. So you have a $12 million assumable loan, right?
Yes.
Okay. So first of all, that interest rate is low right now for what you put in there. There is no operating reserves in this scenario.
Yep.
You're raising money for CapEx, so that's
Yeah.
not in there either. There's no, okay, so it's very, very basic. Like you want to put money in the expense side. You see your expense side.
Mm-hmm.
So basically they took the numbers. They took the numbers, they plugged it in here, and they didn't consider anything else, right? I mean, there is trash removal, there is
Yeah.
legal, there
Mm-hmm.
is turnovers, there
Mhm.
is all this other stuff that's in here that is not part of the expense.
Yep.
Okay, so what's the NOI that they got in here? All right, 1.679 million. Okay, so they basically wrote it as, because I briefly looked at the deck.
Yeah.
Okay, go to the summary. So I just want everybody to look in this underwriting sheet. You start by going to the no in the deck.
Oh, sorry.
I mean, not in the deck, in the underwriting.
Oh, no, okay, in the actual sheet.
Yeah,
Hold on.
in the underwriting sheet. So I want to just explain this to everybody first, because this is important. You start in this, go to the scenario. You start by plugging in market package. Okay, in this underwriting sheet. If you don't want to find this sheet, go to Michael Blank and buy this thing. He has a little program that describes all this stuff to you too. It's like $150. Definitely buy it. Get yourself this sheet. It's probably the best on the market. I've seen so many other ones. This is simple to the point. You don't really need underwriting deeper than this. So you start with scenario 1, 2, 3, 4. You can add all the way, you can add more scenarios. At the top, there's a plus button, and you can get to like 8 different scenarios. So you want to just compare different scenarios. And here, scenarios 2, 3, 4 is all the same. So what you want to do in this is you want to take your marketing package, which is the OM, write it in there. Then you're going to do your version, which is the second one, which would be, you know, other things that you got to look into. Is the real estate taxes, are they going to be the same? They're going to go up. Now in the second one, they don't even have a management fee, right? So you want to put all those things in there. This is very, very, there's missing a lot of information in here. I'm not saying this is bad, but I don't think they only filled out the first one, and they just let the rest auto populate. So you said there was a 4.41% assumable debt?
4.18.
4.18. Okay. You know how long it is?
I want to say 10 years. Hold on, I have it here in the. How do I get this to move? Oh, there we go. Okay.
You gotta move it.
I want to see. Oh yeah, you guys can see what I'm doing, right? Duh.
Yes.
Okay. I have the zip file, but how do I open it? Let me see.
Bottom left.
Oh, okay. Thank you. Okay, so it's loans. Well, this is the whole agreement, but I don't know. It's really long.
Okay, just scroll down. Scroll down, 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 down. Okay, wait. Okay, too fast.
Sorry.
When you get to the numbers, then stop. Go down.
Okay.
There should be
This
a
is the part
section
I
with
like.
with the terms.
I'm looking for numbers.
Yeah, you want to see what the
Oh.
purchase price is.
So I see the interest rate is 4.18.
Okay, great.
Okay.
Um,
Uh,
all right, wait, hold on right there. What is that? Loan. Okay.
13 million.
Okay, so there's 13 million. Is there a look for if it's interest only? So there are a couple of things you want to look in a loan doc. You want to look at what's the prepayment penalty. You want to look at what is the interest rate for this? What are the terms? Okay, go down.
Okay.
How much interest only there is left on this deal, or if there is any.
Oh, 2030, the maturity.
Okay, so 7 more years. Chances are the interest only period is over. A lot of people try to dump their deals after interest period is over.
Mm.
So we're looking at the loan she would assume.
Okay, let's go back to the underwriting sheet. This is
Okay.
going to take a lot of time.
Okay.
So just know that that is something to look at. Okay. Maybe one of these days we'll continue looking at that. So I want to make sure we get some of this done. So, all right, Adrian put the Michael blank thing on the chat. So, okay. Now the second thing you want to do is you want to go to the summary. Go to the summary at the bottom. And under the top, at the top right, it says populate with scenario number. This is how you start to look at the rest of your deal based on the scenario that you put in the first sheet in the scenario side. You have your projections, right? What does it look like after it's built? You can put all that on there. So there's 3 different underwriting you're doing here, and you can populate them all right here with this scenario. So on this scenario right now, without all that stuff, on an 80-20 split on this deal, you're providing an 18.33 IRR. You're providing a 1.577, 105% return on the money. Okay, here's where you want to look at. Go to the P&L. First of all, I don't know if you can get 25% down on this thing. There's a lot of things pretty wrong with this. Okay, well, it says it's going to do a 9.35% returns on your cash on cash. So if you guys look at this, I'll explain it from the top. Your rent escalator, you should probably shove that to 4%.
That's right here.
Yeah. You can turn that to 4%.
Oh, I wonder if,
Okay, wait, then it's fine. Don't worry about it. Just
okay,
leave it. Okay, so you can,
I'll write this down for myself.
yeah. Okay, so management fees in there. There's no trash removal. There's no legal. Advertising 568, pretty unlikely. All right, you're going to be putting in at least a couple $1,000s a month on advertising on here. And you would only know this if you operated a storage deal. We operate one that's going to cost us, $750, $1,000 a month, but we're aggressive. We want to get to the top of the SEO. You want to get these things down because a lot of people don't even think about that. Right. I didn't even know about it until I brought a GP on the team that just happens to be a marketing expert. And I didn't know how big of a role he was going to play until this whole thing happened. If you go down, you got your expenses, all of that, your net operating income, it says 1.679 million. Now it shows the debt service, okay, which means interest only is going to cost you 744,000 a year. And the principal that's being paid down is 221. So you got a 713,000 in distribution per year that you're available to distribute. Now on this deal, because you're structuring asset management fee as 1.5%, you take the 1.5% off the top. That comes out first. That goes to your asset management team. Right? So this is part of that bucket. Remember, there was an asset management bucket and the people that compiled in there. And then you go to the excess cash flow, which is 80% of that. The rest of that cash flow goes to your investors and 20% gets split amongst your GP team.
Hey, Alex,
Yo,
you said something caught my attention. You said there was an interest only, but there was also debt pay down.
Yeah, so
principal pay down.
Yep. So on this deal specifically, what we're looking at, I just want everyone to see these numbers, right? So this, I'm pretty sure the interest only period for this deal is over. So if you're gonna assume a 4.15%, 1.19, you're gonna be getting ready to pay the principal. Now in
I
commercial
thought the
deals,
IO went for 10 years. I thought I had another 7.
no, it's the loan is for 10 years. I don't think that you're gonna get 10-year and 10-year IO. But
okay,
you may. Now, in these deals, in commercial deals, I like to have just as long of an IO period as possible because the principal pay down itself, even though you're paying the loan down, the deal fluctuates, the cap rate fluctuates. So even though you may have equity that you put into the deal, it could be wiped out just by half a point increase in cap rate, half a point increase in interest rate. Right? You just want to keep it interest only. Let the deal cash flow. Don't worry. You want to distribute this 221,000 rather than paying it to the bank. That's what I'm getting at. All right. So this deal, from the looks of it, if you got a 9.35 cash flow, sick. I doubt this is going to be true. Now let's go to your acquisition cost at the bottom.
I was gonna say, they might not be factoring in the assumption of the other loan.
Yeah. So, I mean, this is, I usually take 3% for closing costs just for, safety measures.
Mhm.
This is really just showing, I mean, whatever, it's 2.3. Okay, go to your exit strategy. This is also important. Okay, so they did this. The exit strategy on the top left that you see, it means that it's a 5-year hold and they're going to sell it on the 5th year. And it's a projection scenario. It doesn't mean that they're going to do it, right? But most investors now look at deals that way. Now, the experienced operators, Grant Cardone, he's showing you returns and he's going to take this out to 10 years. When you take this thing out to 10 years, the returns look like 300%, 400%, but it's over the course of 10 years, right? So I would like to look at deals over a course of 10 years, but you will also want right. So we're going to talk about the assumption fee in a second. So you want to write it at 5 years because that's what everybody looks at, right? That's what everyone's looking at, unless you specifically start to educate your investors. Once you have your investors and they're comfortable with the way you do things, you don't have to follow the industry standards anymore. All right, so there's no refinance, so we don't look at that first box. On the sales side, you are exiting at a 7.5 cap. Okay, go to the scenarios real quick. Sorry. Scroll down. Okay, you're entering this deal at an 8.4 cap rate. You see where it says cap rate on sale? Up, there. So
There's so many
8.4.
numbers over here.
Yeah. So you're entering at 8.4 and you're going to exit at less cap rate. If you exit at less cap rate, that means you're going to get more appreciation. Normally, what you want to do is you want to increase by a quarter or maybe 0.15 to 0.35 per year on your cap rate increase. So let's do 5 years would be let's go to a 10 cap. So take that exit strategy, go back to exit strategy. See, this is how people can get you. You're like, hey, look at my underwriting deal. And if you guys know this, you guys are gonna know a lot about underwriting. The summary part that showed 100%. Wait, right?
Well, and that's why I said that they probably didn't include the assumption of the mortgage, because that's what realtors do. They leave out the pertinent
No.
information. that you call.
This is not a realtor thing. This is a
Well,
you're a
everybody
buyer
that
underwriting this.
all brokers do it.
This is not drawn up by a broker. This is drawn up by a buyer. So go to the cap rate at the top right, second line, top right. That's
Right?
left. That's left. Go right. Yeah, that's sales.
Oh, right here.
Yeah, take that and put 10%.
I don't know if it'll let me because I'm on.
Oh, right. Crap. Okay, so if you take that to 10%, I promise you this deal is going to come way down on your sale price, and your returns are going to go down to like 30%. Because as cap rates increase, sale prices go down. Cap rates go down, your value goes up. Okay, it's an inverse thing that happens. Cap rates are usually going to be around, you usually will want your cap rate to be higher than the interest rate. When it goes under the interest rate, you're probably going to be negative cash flowing. So these are not set in stone type of things, but these are just good indicators for you when you're looking at underwritings. So let me share my screen now. I'll draw that up real quick. What time is it? Okay, 11 minutes. We got this. And if you're on this call and you're a great underwriter, dude, interrupt me if I'm out of control and I'm saying something that's ridiculous, but I don't think I am. All right, I know that when we scroll down enough, so you go look at these deals, right? There's four properties. Half of them need a lot of, they're selling it to you based on what's possible. Well, why don't you go and do all this stuff and then you sell it to me? So they're not going to do that because they're like, oh, here's the possibility. Okay, here is their overall, Their financial analysis. First of all, this thing is probably bullshit, but underwrite it based on this and be like, sure, broker, I will give you money based on this. What did they tell you? Did they give you a, actually, you know what? I don't even need it. Hold on. So let's just go to their gross potential. Gross potential income. Okay. I'm going to put in their actual income here, which is 2369195. Okay, you guys see that? Right.
Mhm. Yeah.
So on that line. That's already with all the vacancy and all the stuff built into it. Is it? Hold on. See, this is what you gotta look out for when they give you numbers on gross potential rents. Oops. All right, let's go down. I'm gonna see their total, their current. Oh, here, wait, current revenue. I see. Okay, it's the same. Wow, so they made the current and the potential the same on that. Total expenses 737,988. Your net operating income is that. Okay, so we're assuming what did I say? 13 million was the loan?
Yeah, in the docs it said 13, but the broker told me 12, but
Yeah, well, let's go 35%. Oh, okay, great. 35%. Let's go operating reserves. Usually in apartment deals, you want to do $1,000 a unit. This has how many units again?
1468 or 1,418.
Okay, so that's a lot. I mean, on a storage deal, I would just put like $100 a unit or something. So let's just say 114,000. You're gonna put in reserves. We do way more. Even on any deal, a small $5 million deal, I put 200K in reserves, minimum. All right, there's CapEx. I don't know. I don't know what the CapEx is gonna be, but let's just say it's $3 million. Okay, so interest rate 4.19. Oops. Okay, I'm gonna just believe the broker at this point, right? So now you have 8.16 cap, which is already lower than what your other underwriting is. And this is just me throwing numbers in there. I'm gonna go to scenario 1 as the next thing. And okay, great. It's showing 112% returns on this. We always do 70-30, okay? Because 80-20 is just like it's super skinny. And we do 2% acquisition, 2% management, 2%. We do a 2-2-2. That's what we do on our deals. When you do a 2-2-2, just remember that, and you do a 70-30, and you can make 100% returns on a deal. That means this deal has a ton of potential. It's fat. Because if we take this and go to 80-20, and you're going to just start starving the GPs and people won't want to work anymore. Okay, Grant does 1-1-1, but he's doing $100 million deals. So see, that increased it by 20% returns for your investors. No, pay us for the work that we do. It's a lot of work. And you guys as GPs will get to know this. Our first deal, the one that Jennifer's invested in, we make nothing. We literally make nothing. It's brutal to work that one. It's fun. You know, I appreciate it, but we literally make nothing. So now you have 6.68 cash returns on this deal per year. Okay, let's just, oh, we also did interest only here. We're not doing interest only. Right here, there's also an interest only thing. We're going to take this out. Let's go back to the P&L now. So now we're down to 5.25% cash on cash on a deal this size. Still not bad. Going in, not bad at all. Okay, I like any positive cash flow, 3% and up with upside on the deal. Great location. I'm game for it. Let's go to the acquisition costs. You know, I mean, the lender's probably going to ask you to hold some money and all this stuff. So, but we're just going to leave it. Just give it. Okay. It does 112% returns. You came in at an A cap, 8.68. And in here, it's exiting at a 5. So your exiting sale price is $37 million in 5 years. Definitely not happening. Let's go to 10. Let's see what happens when you put 10. So you guys see the number sales price, 37 million at 5.
Mhm.
At 10 cap, you're now selling at less than the price that you bought it at. You can't even buy this deal. Now you're saying, okay, let me go back. I'm offering a negative IRR now. Doing a 6% return on your money. So how much can we buy this for? I can't buy it at 20 million. Let's just change it up to
17. Oh,
well,
15.
okay, yeah, 17 million.
I don't
This is
know.
a
I
lot of
just
units.
came to my mind.
Okay, 17 million. Looks good to the bank. 2.52 DCR. Now you're at 9.6 cap. And let's say you know this area really well. You're like, we're not gonna but look, this also increased your returns a little bit. This is why the purchase price isn't as important as everybody thinks. You're not moving the needle that much by buying it a little bit cheaper. You actually just got to figure out your operations. You got to figure out what you can do to increase rents, increase the possibilities. See how hard it is to actually get a deal to work. Let's go. Let's just say, all right, I know this area. It's going at an 8 cap. It's leaving at an 8 cap. We still at 17 million can't even make sense of this deal. Right now we're going to say, all right, if I did all the CapEx, right? We did this CapEx, we did all this work, and what's the potential here? So let's look at their 10-year. I mean, their NOI after the CapEx is only, dude, 112,000 more a year. That's like nothing. If you take 112,000 and you divide it by the cap rate that you went in, which is 8% divided by 0.8, you've really only gained, you created $1.4 million. And okay, wait, sorry, real quick, since you can assume $12 million, let's change this real quick to 30. Nope. 28. 26. 24. 23. All right, let's just say you put 23% down. Maybe this is going to make the deal better. I mean, it went up 10%. Right now, you're like, I really want to make this deal work. I'm going to give my investors an 80-20. Now we're in the green. This is at least a deal that Michael Blank says, okay, you could find some investors. IRR 14, average return 15% a year. Still better than anything else you're going to get. I mean, you can tweak it as much as you can. It's just not going to go much further. Right. So on this deal, this is just not going to be a deal that works, especially if you don't have experience in CapEx work. All right. And on here, what else is there? It snows. Okay. It snows in New York. Do they put any of that stuff in here? On-site payroll. I guess maybe people on site shovel this thing. No way. They're not shoveling anything in here.
They
Yeah,
have one
so-
person on site, yeah, on each location.
Okay. That one person in our deal, we have 2 people on site, and we're actually gonna look into automating it. So if you have a lot of experience, you may be able to do some things for this deal, right? To try to squeeze things here and there, but this is just a lot of squeezing. If I look at the pictures, this one looks decent. I would buy this one by itself. It's got a house with it. You know what? The reason why it's also so low, it's because there is one property that is just land, right? Or
Um,
just got one building or something?
it's well, there's one that has actual
This.
retail. Yeah.
Okay. So they make this as a separate property to add. I would just say, I don't know. Let me underwrite each one of these separately. Can I buy one, not all four? Because what happens in the package deal is they're trying to sneak you one of the worst ones that's performing. They're trying to shove that in there. So you
Yeah.
got to figure out which one it is. Now you get to break each one of these deals down a little bit. And they give you the information in here. All right. So this is not hard. This is not hard, everybody. It may seem a little bit hard. Okay. It may seem like it's complicated. Once you learn this, this is not the hard part of the game. The hard part of the game is if this deal worked out, how do I take it down? Right? What am I going to tell the broker? I just see this is the wasting of time. I go and have these conversations with brokers. They send me the deals, they send me the list, and then all of a sudden, I don't know what to do after that. I'm bringing it to other people. That's like a kind of a waste of your energy and time. Flip it around, work with other people first, get your experience. Then when you talk to brokers, you're talking with confidence. They will sense the confidence, and you actually have a team that can come and help you. Otherwise, now you go look for your team after you find the deal. Like the broker is going to hit you up, be like, hello, hello. And in today's market, they will. But in a good market, they're never going to talk to you again. They may even take you off the email list just because they'll be like, you just wasted my time. So, ramen, raw man. What's up, brother? How you doing?
Hey, yeah. Thanks for letting me speak. So yeah, we met at the Grand Summit. So thank you for your Marriott talk as well. I liked your talk and spiritual
I got kicked out of the club for doing that.
Yes.
They invited me back in today, though.
Okay. So, and your spiritual talk as well. And I'm from Washington, and I do have a couple of questions for you. That is the assumable loan, right? So is assumable loan is a good thing or a bad thing? Necessarily, not necessarily. And once you assume that loan from the seller at a lower interest rate, can you finance the rest of the amount from a different lender? Can you do that?
Depends. So that depends. So for example, we have a small balance loan from Freddie. They will not let anybody into second position. That means we got to raise 50% for this deal. And by raising 50%, usually your returns would take a hit and be a shot. We're raising 50% and still going to 2x money and still have cash flow. Like usually that just kind of doesn't really happen. Right. So you have to be careful of how small of a loan you're assuming. If you assume a 2% loan, so let's look at the exit strategy real quick, right? If I assume a loan that was 4%, okay, let's just see the difference. This deal is really big, so the number is kind of crazy. But let's say you assume a loan at 4%. You have to exit. If you exit at a 6, what's the difference? The difference is $15 million. That means if you put work into this deal and generate a $15 million worth of equity, because this went up 2%, that entire equity is wiped out. All right. So at 4%, you got this, your deal is worth 46,693. Okay. It goes up 2%. It's now worth 31. So you got to be able to see, like, you don't want to be too aggressive with this loan assumption. See, a lot of people are cash flowing deals, so proud of them finding a 3% deal. Okay, it's 3%. I'm assuming a 3% debt and I can cash flow it. But what you're doing is you're overpaying on the front end. You will overpay because you can cash flow the deal with a 3% by overpaying. But once that interest rate, and this is why people are in trouble, because they got a 4%, they got a 4% adjustable loan. It goes up to 9%. Like, this is a lot of people cannot survive this. All right. Experienced operators. Robert Martinez got 10 properties with this type of exposure. He's got 20 years of experience. No, maybe not 20. He's got 12 years of experience. $700 million in real estate. But if you think about it, like, let's just go back in time to look at why people would do a 3% adjustable. You take a 3% adjustable, you hope that you can still exit at a 3 or 4% in a year or two. You go and put all this work into it. Because you're not raising the capital, you're getting it from the loan, you're getting it from a loan. So you put all this work in. Let's just say you did so good and you increase the value of this property by 15 million, and you're going to do 100% cash out for your investors. And then all of a sudden the interest rates go flying up. All of that gets wiped out. Okay. And now you're just bleeding. Why wouldn't you just, oh my God, the interest rate's at a 3.5. Let me just lock it in for 10 years and then just do what you have no
But-
interest rate exposure. Raise the capital to do the CapEx and then just let it roll.
Right. But how about if the assumable loan is at like 40 years term?
I mean, if you're going to pitch me a property and tell me you're going to hold it for 40 years, I don't want it.
No,
That means
the loan term is for 40 years. Probably we're not gonna hold it for 40 years.
either way, I mean, you go get a loan for 4%, for 40 years. Yeah, you're probably going to cash flow really well. And eventually when the interest rates come back down to 4, you might make a whole lot of money on the deal.
Okay.
But that debt that you're talking about, you're assuming a 40-year loan is going to be a HUD loan.
Yes.
HUD loans have crazy regulations. All right. I've never done one. I just know of them. And it's because I'm in rooms with people that talk about this stuff. HUD loans allow, I think, like 2 distributions a year. All right. That's the first thing. Second thing, prepayment penalties is insane.
Right.
If you try to get out early, it's like millions of dollars.
9%.
Yeah, that's ridiculous. 9%.
Yes.
Of the loan.
Yes. Of the loan balance.
So you're stuck with this property forever. The only way you're going to exit is you're going to tell somebody to assume your HUD loan that you just assumed from somebody else.
Right.
HUD loan is like an FHA. They're going to underwrite the crap out of everything. They're going to come and look at your property. They're going to say, you got to do this. It's crazy, man. So, all right. Snow removal, at least $1,000 a month on 4 big ass properties like that. I don't know. It's probably way more.
Right. And my second question was, once you assume the loan, can you finance the rest of the amount?
Yeah.
Can you do that?
On big debts, on big things like that, they have mezz debt, things that come in second position, things like that. I mean, once it gets big, it gets easier. The smaller it is, the harder it is. That's really how the debt game works.
Right. But the hard lets another lien holder on the second position, or they don't allow
take a
it?
second position. They want, and then your first position loan has to say it's okay and say it's okay that this person comes in a second position.
Okay, got it. Thanks.
So yeah, a lot of nuggets in this deal. Vlad, what's up, brother? You want to add anything to all the stuff that I'm saying?
Yeah, I actually, it was a good question about the mezz debt. In many cases, mezz debt will take over the property. They cannot technically take over the first position because the first position debt will not allow it. So how can mezz be ensured that they're protected? They will take over the property. They'll kick you out as a GP, and they'll be GPs in your case.
Yeah. So they're gonna say you're a GP until we say you're not.
Pretty much.
So they're gonna be like, as long as you keep giving us our 7% every year, pref, okay, or 8 or 9 or 10, sure, it's fine. As soon as something starts to happen in the market, they're gonna be like, all right, it's time to sell. You won't even have control of it. If they want to sell, you don't have control of it. So now you got to make sure that, okay, if I bring in Mezdet, they got to be able to play ball. Maybe if you have crazy track record with them, they'll be like, fine, you make the ultimate decision. We just want in. You're a solid investment, right? Everybody is considering risk, and you have to consider risk, and you have to know, am I in a position of power, or am I in a position of beggar, whatever is the opposite of power, of weakness? That's everything in the financial game and investments is that. Who's in the position of power? And you want to not rely on them. Hey, I can make the deal better by bringing Mezdet in, because even if they charged 11%, a regular investor is getting 16, 17, 18 IRR. You're saving 7-8% on the deal by having Mez paying 11. Now, Mez comes in and you got to pay them pref. That means forget cash flow for your investors. Your investors are in for the long haul. They're in for the equity bump. Equity bump's going to be great because on the back end, they don't participate in upside, downside. They don't participate in taxes. If you can get half of your raise in Mez debt, that means you can say, investors, you put 100K in, we give you 200K depreciation. We give you 180K depreciation. Just that may work for some investors, right? So there's different investors in different places. When you're raising capital, you got to find out where your investors are at. That's why you want to be curious and be in a place of discovery. Hey, Nick, if you're falling asleep, you can just bounce, bro. You don't have to stay this whole time. Go.
I'm not falling asleep.
All right.
I'm on my phone.
All right. It's a lot of endurance for a 16-year-old to sit on this call for 2 hours. Twice a week, 3 times a week. This dude is 100% going to be a multi-millionaire in his 20s. No doubt. So, he's paying the price right now. I can imagine being 16 and sitting on this call. I'd freak out.
So I know Thursday is the day. Do you have any other day?
Yeah, so Monday nights I do a day, and then Sundays and Wednesdays I talk money and God. So that's another day. That's a whole different group of people that pretty much come and hang out there.
Okay.
Yeah, I just like being on this. I should just have my own radio show going for 24 hours a day.
How can I have the other registration links?
Great.
I
So
just
forgot
put
to
them in
say-
the chat.
You just look, see, he's even paying attention. So it's in the chat. The registration to the Monday night is the first link. The registration to A Course in Miracles is the second link, and you will get reminders. My Instagram. Wow, how did I not put this out there, Nick? You got to remind me. And can you make my name just automatically look like this moving forward? My Instagram handle.
Oh. You want it in your name. You should
Yeah,
do you should do a bar and a dash, not
A what?
dash. You should do like the sideways bar.
Oh.
All right.
All right. So
I'll
you
put on
guys
your Zoom
learning this?
account.
This is also part of the game. Is like this.
No, the one above the enter key, the one that's straight.
Oh.
You might have to use like shift.
Oh my God.
I don't know.
Oh
You're
my
a
God.
pipe. I don't know. You have a Mac keyboard, so I don't.
I know, but remember when I spilled all the stuff on my Mac keyboard?
Yeah. There you go. You can copy it from chat too.
No, I don't.
There you
need
go.
to.
You got
Boom.
it. Look at that. Boom.
It's called a pipe. Nick, it's called a pipe, bro. Just tell me it's a pipe. I would have done it.
Yeah. For sure.
I don't know. I don't really like it. It makes it look like Alex Love Little.
Lil Alex.
All right. I don't know. I don't like that. I like
All
my
right.
dash. I'm going back to
Or
my
maybe
dash.
maybe just no dash it up. Just use the @ sign as your break. Maybe you don't need anything.
No, man. I like this. Okay.
That's better.
So
Thank you.
Yeah, thank you. Thank you everybody for being here. Any last questions? I know this just went on. I gotta make sure that we do it certain time. But oh, Jackie, welcome. Any other questions? Any thoughts?
Thank you, Alex,
Yeah, you're very welcome.
for underwriting that.
Yeah. Thank you for bringing it up so that we can do it on this call too. I just always want to figure out ways to provide value here. So if anybody wants, what else would you guys like to cover for next Thursday? Let's do that. The people that are here gets to decide what next Thursday is going to be.
More deals, more underwriting deals.
Okay. All right. So if you have deals that you're looking at,
In fact, okay, if I can add, so can we let's say compare one deal that you did in past which worked well, like underwrite it again at the point of going back in time, and then another one that didn't go well, going back in time, but you thought it could go well, but for some reason it didn't. So that those examples could help to build a mental model. Just a suggestion.
Okay. We will do that. Anything else? Pedro's in the house too, Jake. Who else?
How you doing?
What's up?
How are you?
Yeah, Adrian texted me. He said, "Look who's in the chat. Look who's in the group." He was here Monday too. He was here Monday.
I'm gonna bring my whole fraternity in here at some point. This is great. Okay, PJ, go ahead.
I have a simple question. Between multifamily and storage, which one do you like better?
I don't know. I don't really want to say. I like storage, man. Storage it's fun. It's like you can do a bunch of stuff without dealing with people.
Right.
Dealing with people kind of just it's freaky.
That's the hardest part. Hardest thing that Grant always says, right? Dealing with people is the toughest part. So are the returns similar? I've never done a storage or multifamily. That's what I'm asking.
Yeah. So I mean, if there was a storage deal that returned the same amount as the multifamily, I'd pick the storage. Now, multifamily, it's like it makes you more interesting too, though. Like if you own a building, like we have one that's like in the downtown Fremont area, you're like, that's my building, that's cool. Now, if you go to some random place and say that's my storage, only people that are like in this space kind of thinks, oh yeah, storage is another thing. It's cool because it's new. But when everyone starts doing it, it's not going to be as hip or cool anymore. It's always the nice shiny building is nice.
So on that note, I'm reading chat. Somebody saying hotel. So if you say, "Hey, that's my hotel,"
that's because they saw my Monday night call in which I got wrecked by my boy Sujay about hotels. Everything he said about hotels, I'm just like, I don't even got a response. Now, some people did say, "Oh my God," after hearing that, I'm never gonna do hotel. So then I don't know if I really lost on that battle, because it's a lot of work. I mean, hearing the amount of work that he put in, it's kind of like that conversation with Jen again, right?
So the way I like it, if Sujay is doing all the work, then why not, right? Then we can we can invest and
what happens if Sujay gets hit by a bus? Then I'm screwed.
Correct. He did not answer that question.
I know he didn't.
He dodged it. He said,
he said something along the lines of it's gonna sell at market price. I'm like, the hell?
What if interest rates are 12%, right? So
but it was fun. That was a really fun call. I think everybody had a good time. Sujay had a really great time. He's coming out to Vegas and we're putting some offers. We really want to take this one hotel down. Now, I'm doing it because I'm all about location. Like, I don't care if it's a warehouse in the best location, I'm interested in it. So sometimes people are like, wait, so what do you like anyways? I'm like, I like location of things. Like, that's what I like. And so you'll always see our deals in like just absurd good locations. Like, I will not be, this New York deal, like you kind of tempted me with the art and the stuff, but first of all, it's in New York. It snows. I don't want to deal with anything that has snow. Yeah, I don't know. I'm just not that excited about any upstate New York type of stuff. I don't see much movement there. I see people moving out of that state, if anything. Yeah. Everyone's coming to their senses. COVID is like, dude, wake up. You don't need to be in the cold. You don't have to freeze your balls off anymore. You can actually move to the South and enjoy the year all around. And then they're in Florida and they're chilling all year round. And they're like, damn, there's so many freaking mosquitoes in Florida. So then they move out to Texas. Actually, Texas has mosquitoes. Then they move to Arizona and Nevada. And they're like, yep, Vegas, baby.
Alex, maybe we can get a hotel guy to come underwrite a hotel deal in front of us.
Underwrite hotel deal. I can't underwrite a hotel deal. I'm gonna have to bring my boy in here to write it.
Yeah, exactly. Sujay or somebody, it's a good learning experience for all of us.
Okay, I'll ask him if he wants to come on this call and do it again. I'm sure he will. Me and him, just like we have such really good connections. Like on every level, we just love everything about each other. It's really cool. I'm really glad I met him.
I agree. It was great, and I would love to invest, in hotels as well.
Oh, okay. So hang on. Where's my pen? Actually, we have a call tomorrow, right?
Yes, we do. I'll talk to
Okay.
you.
All right. So remind me again that you like hotels, and I will write that down and I will hit you up. How liquid are you?
I'm decent. I will talk tomorrow.
Oh, okay. All right. Yeah, but see, that's the questions you want to find out, right? Like when people say they want to invest in something, like don't be shy of those. A lot of people are afraid to find out that. It's a
Okay.
neutral thing. It ain't bad, it ain't good, it doesn't really matter.
I'll tell you. So my I'll start with revenue.
You don't have to. I mean, you don't have to. We could wait till tomorrow. It's fine.
I'll tell. I'm learning. I think everybody is open, so why not? So my current revenue is 8 million in my business. Target is 16 million. That's revenue, right? Last year I made 2.5 million in profit. My liquidity is probably 2 million right now because I keep investing. So it keeps changing all the time.
Nice. All right. So let's see. Let's see who in here is actually operators. Oh, Vlad's gonna be hitting your ass up. I'm sure. Not just
Well, if he's not looking to invest in apartments, then I invest only in apartments. I do only multifamily.
yeah.
Yeah,
But
I'm learning
but
about.
I touch him in Sunbelt states, right? Only in Texas because it's landlord friendly. Kansas City, the Carolinas, all landlord friendly states. I don't do storage. I don't do triple net leases. Or, I mean, if you want even high returns, look at RV parks. RV parks provide, I don't know, nearly 30 IRR if you think about it.
Maybe
But
depends on which one.
Exactly, that's true. Because who drives RVs? Rich people. And they'll never run out of money. They always drive them, basically, because each RV costs like $500,000 if you think about it.
Yeah,
So
the nice RVs. I mean, you gotta
nice
get a
ones.
nice RV park, if anything. You gotta get the real nice ones. Because I once owned an RV, and it was $7,000. Where's Jake? Jake and Pedro know. Pedro, you seen my RV back in the day? Did you see it?
I didn't get a chance to, but I
You didn't
remember
get a chance to see it, bro. I was living in the woods for 6 months.
that was
That was another soul search journey. Jake and Pedro know when I did that. Yeah. So, you know what's even better? Just have a park for them to leave their RV and they store it. All right. That's you just get a piece of land. You don't gotta do anything. You put some crushed asphalt on there, and then you have somebody come in and draw some lines, and then they just park it there. You don't even gotta build anything. Cash flow. Cool. So yeah, cool. PJ, it's good to meet you, and I guess now I know your net worth and everything, or your gross revenue.
So I'm in childcare, by the way. So my primary business is childcare.
Is childcare? How the hell you generate $8 million in childcare? How big is your operation?
It's big. So Primrose School, I'm not sure if you heard. It's the top of the line in childcare, just like Ritz Carlton in hotels.
And where? And where are you? Is it everywhere?
I'm in SF Bay Area. I have 2 operating locations, one in SF Bay Area and one in Portland, Oregon, and opening a 3rd location also in Bay Area, California.
Oh, cool. Going into California. Nice.
That's where I live. So that's where I live.
Oh, right. Okay, cool. Well, amazing. We're like neighbors. Come visit me in Vegas, or I'll come visit you at some point.
Everybody else is Florida, Texas. That's where everybody invests. So yes, that's good. We are close, close enough.
Yeah, that's awesome. Okay, cool. So thank you, everybody. I mean, I guess we might as well just take the next 5 minutes. We'll go to the top of the hour. I don't like leaving these calls. I don't like leaving it when there's 34 people in here. I just feel like let's just hang out all night if you guys want. But, what else? Let's bring some interesting conversations up. I know you guys got more questions and stuck
Uh,
where you're at or whatever,
Right. Sorry, quick question. So if I need to, let's say, send you a deal or potential deal for numbers to run through or for an extra pair of eyes, can we do that?
Sure. You got my Instagram handle right here. This is how Allie and I became good friends. She just found me on some website and then hit me up on Instagram.
Okay. Anything other than Instagram, like LinkedIn, more anything else?
Yeah, it's the same name on LinkedIn. Hit me up on LinkedIn.
Okay, I will do on LinkedIn.
Yeah, let's be friends. It's
Thanks.
weird. LinkedIn doesn't like suggest people that I'm actually supposed to be friends with. It suggests random people. I'm like, dude, I got friends that I'm not connected with. Why don't you show me the suggestions? I'm not gonna search them. Yeah. Okay.
Hey, Alex.
Yo.
Hey, does trailer parks and storages have the same benefits with write-offs and taxes?
I'm gonna mute you real quick while I answer because it echoes. Does storage and RV have the same write-offs? So you will have less of a what's up, girl? Stop it. You will have less of a like your cost segregation is going to be less. Okay, because you have less of a building. You have more land and just some stuff, right? So your depreciation is going to be less. My actually CPA just sent our K1s here for our storage deals. I'll look what the depreciation was. But it's going to be less. Unless you got like some super sick building on there and, even then it'll still be less. Because what they do is they take all the things that you can depreciate in the first, like stuff inside buildings and push it up. And one of the interesting things that Sujay said about hotels, which was interesting to me, is because majority of hotels have furniture stuff that allows you to depreciate it quicker. His depreciations are actually higher than the investment most of the times, which is, it's cool. At the end of the year, people freak out and they get desperate. And I remember at the end of last year, people was literally saying, who's got any deal closing by the end of the year? They were willing to throw that money into any deal. And when you get to that point, if you didn't strategize earlier with your CPA, then, you would just throw it in any deal because it's better than giving it to the IRS, right? Now you just throw into a gamble. It doesn't matter. You get the tax write-off. So yeah. Cool. 2 more minutes. Do I have anything else I'm supposed to do today? I mean, if you guys want to just keep hanging out here. No, I do have a call coming up in 30 minutes. Who's coming to Vegas? Who's coming to Vegas? Who just said that?
Me, Ian.
Oh, right.
But
Hector,
it's
you
too
still
far
coming to
from
Vegas,
you.
bro?
No, brother, we can't. We have the plans to be there 6 and 7, but plans change.
Okay.
What's up in Vegas? I didn't know anything about Vegas.
Right. So let's just do some market update of Vegas.
Right now, what are you talking about? Is there an event going on?
No. I'm just trying to see who wants to be investing in Vegas. Who's interested? Universal coming in. Universal. Okay, Allie. Universal is opening up a 250,000 square foot all year round haunted house. You think Universal's stupid investing into Vegas? No, they know what they're doing. They got this $2.2 billion giant ball Okay, that's an LED screen. They're about to hire, I think, 3,000 people right there. There's so many jobs coming online, so many people moving to Vegas. Like this is, there's all the other markets are kind of down, construction sites empty, people freaking out in Florida, people freaking out in Texas. Texas is like, dude, my insurance just went up to, $2,000 a door. Everything in Vegas is cheap. Just think about this idea. Like you have cheap living, world-class amenities. That just, it's got to change, right? When is it going to change? You want to be a part, you want to be there before the change, or you want to be there after the change? Because one way or another, syndicators and investors are coming to Vegas. They just don't know it yet. People are just being stubborn. They're like, let me wait for all the institutions to go in. Well, they're here. Formula One's coming in November. So, buying anything in Vegas might be a good idea right now. That's what the Sphere is. No, the Sphere is this big LED screen. The entire thing is an LED screen. Like it probably can turn invisible. I don't know. It can like mimic the image behind it. It could be like a chameleon. I don't know. I don't know what it can do, but I know that the hotel that we're trying to get is literally looking right at it across from the Wynn golf course. And we're like battling like crazy for that thing. But it requires like 5 million in renovations. So we don't know. We might not be big enough players to go fight for it. I've seen it from the air. Yeah, it's like a big ball. Crazy. All right. So, I hope you guys join us in Vegas. Hit me up if you're interested. And yeah. Thank you, everybody. Thank you, Allie. Thank you for all your support. You're like a great cheerleader and a great, just really cool. I like every time you're around, it makes me more confident for some reason.
You're the best.
All right. Good night, everyone. Have an amazing Thursday night. Have an amazing weekend. I will see you next time.
Thank you, Alex.
Bye.